Hey guys, I'm gonna go ahead and find this link real quick here. Post it onto the Discord. What is going on, traders? This is gonna be a quick video about how to. Very weird. Come on. Trying. What is going on, traders? To find a link here. Let's see. Share members only. There it is. Video link. Close. Paste it to Discord. What I mean is there is a custom study built in. Post it over here to the lounge. All right. Testing, testing. We should be good on sound. Stream is healthy. Make sure we're up and going here. What's up, appraiser guy? All right. Should be good to go. You're right. It does take a little bit of time for it to even show up anywhere. That's interesting. Mr. Walnut. All right. Yeah, no, thank you very much for pointing that out. I'll do that in the future. I will be a little more careful about. I'll be a little bit more careful about making sure I post the link here. All right. Oh, just realized something. Hold on. Turn these levels off here. All right. Levels. 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 More levels off. More levels off. It's taking me a little bit of time here. All right. And we can turn this off. That. Just doing some housekeeping here. Make these charts nice and clean for you guys. All right. What's going on? Hey, Charles. Nice to see you. Now, if your guys' YouTube names don't match, then I'm going to be struggling to know who you are. So just FYI. I assume you guys all match, but you know. Let's see. Charles. Maybe Charles isn't real active in Discord. What's up, Jan? So we'll see. Because I don't recognize Charles from Discord. From some, I mean, I know you're there, but maybe you're just quiet in Discord. So that's why I say if your name is different, then I'm gonna struggle. Apparently, there's a user that can't connect to the Discord right now. So I've been trying to help him a little bit. He's struggling. But anyway, let's go over some trades here. So I got a little chopped up this morning. I'll be the first to admit it. My thesis was to, on the E-mini, go a little long with a essentially. Let me take a quick look here. Hold on. We need to kind of zoom out here to get an idea. Okay. So you see how this market in the overnight sold off? And look, we have this sort of left side consolidation, right? We come down. You can call it a left shoulder with the trend line. or something. um, my thesis to the L3 guys was to get long in the mid 30s to target above 55. I took several stabs at that in with the news. Let me see. Where is the? So here's the open. It's a, man. It is a little bit. I realize I need to change this. Hold on. We're gonna change it. Where is it? Transparent open highlight. Okay. Hold on just a sec here. We're gonna go 75% transparency. That should do. Oh, that's better. Yeah, maybe even 65. Yeah, much better. Wonder what this one is. I should just match it. It's a little difficult to see. All right, hold on. Let's see. Studies. Move it over. Where is that? Transparent close. Well, that's interesting. That transparent close one at the top here. This transparent, where is it? The open one. Ah, where is it? Oh, that's because I called it something else. OVWAP range highlight. My brain just said nope. Okay, that's 75%. Well, it looks so different. 75%. And that one's 75%. It must be a different color. All right, I'm just doing some. I just want to make it transparent open highlight. Is it because one's transparent and the other's not? I don't know. Maybe it's the difference. Yeah, 65. So, it's close enough. Or maybe we'll just do 55 for now. Must be have to do with the transparency. That's all right. Oh, you know what? I should save that change. Volume bars. ES volume bars. ES red green. That's the one. Did I apply it? Yeah, I think I did. Well, I saved it nonetheless. Okay. So the thesis on the E-mini was get long on this right shoulder for a break, and boy, on the news that I stopped out in. I stopped out right here. Right, I was thinking, oh, we're going to the moon, and I bought into this pullback. I stopped out. I got long back in here. And I had a nice trade. And I did take off almost all the position up here, and then I ended up stopping out of the position at 49.50. So it was just a kind of a crazy morning, but like two losers in a row right at the open. Pre-market I did fine. I bought the right here and sold, I don't know, somewhere up in here, right around 40. So that was okay, but small size, small trades. But then these, I mean, this kind of sucked in this area. But anyway, on a slightly higher time frame, what I was kind of talking about this morning with traders, so we're just doing a little bit of review, was this idea. I'm going to go to my 5-minute chart real quick. Hold on. Let me do something here. All right, the view's going to be a little different here. There you go. So top left up here, right? The idea was, sorry, MP Grommet is not fired up this morning for some reason. All right, here we go. Right, the idea was basically, here's your neckline, here's your left shoulder, here's your head, and potentially right shoulder targeting neckline, and as kind of mentioned, take profit above neckline. Let's see if it continued up into 75 to 81. So my profit targets were, my ultimate profit targets were into here, right? Kind of this opening VWAP from yesterday, right there. And let's see, undo this. The undo button's not working for me. Okay, so, well, that's okay. Um, so, I mean, look, in theory, kind of got it right. In execution practice, this was, because of this news, it was a very hard trade for me. I stopped out a bunch here. So that's what we were talking about, or I was talking about in L3 this morning. It's kind of my main thesis. Again, it's a little head and shoulders type of thing. And I was talking about it when the market was starting to drop pre-market. My trade note said, look for the right shoulder and look for support in the mid 30s, right? So anticipating that this right shoulder might form, it did. We ripped upside. It all played out, but again, I got stopped out several times here before I finally made my nice big winner up here. And then that got me green on the day on the E-mini. So that's kind of been my E-mini trading so far. I did get short on the E-mini up into 48, and then I covered down into this area here for 1R. So that was nice. That trade worked out. And let's see, if we go look at that trade, the way that trade looks, Mr. Phil C. Nice to see you. Sorry, you know what? This treadmill's not going. I need to get my treadmill going because I'm just standing here on my treadmill rather than walking on it, and the treadmill gives me energy. So guess what? Let's get the treadmill going. Hold on, drink some water too. Ah, that's good. All right. So anyway, 2.5 hours here after market open. The market has failed, essentially, to break this inverted head and shoulders neckline. So we've trapped meme pattern inverted head and shoulders longs this morning, which is why I always suggest try to look for the entry at the right shoulder, take profit into the neckline because these things fail, right? Once the meme pattern shows up and it looks all perfect, if big money wants to sell, they're going to sell into the new highs and trap traders. So that's kind of what looks like has happened today. Okay, anyway, let's get back here. Turn this off. All right, so anyway, this is a, just to show you guys, 5-minute chart, 30-minute RTH chart, and TPO chart, right? So my upper configuration has changed slightly, and I'm making room for other charts on the lower 49-inch monitor. So that's what you guys are seeing right now, all right? Just a little change in configuration. Clear this. Let me get back to the top right. So now the footprint's smaller and the volume bars are a little more prominent over here. So we have 1,500 volume bars up here. And so you can see here that this market has kind of stair-stepped down. And there's weakness up here into this area. You know, I took a short in here on the E-mini as well. I took a short NASDAQ from here, and I would call this probably not A++ BBWC, but like, you know, you get this rip. Oh, that's not a good color. Clear it out. You get this rip down like this, and then we consolidate. So there's a lot of people positioning for a move up here, but you get a big move down, right? It's a ripper. And then it V's straight up. And the reason I take the short trade here is because of the V, right? So with BBWC, let's say you get a breakdown, and then you get a V move like this, right? So this distance here is 1, 2, 2.5 times the distance here. So it's a big move down, but you get a V move. All the people that bought here, they're going to take profit. and then the trap traders are going to want to get out. So I took that trade on the NASDAQ here. Essentially this move. It's the exact same thing, right? And I got short. I got short too early. I got short here, and I stopped out. It was a tight stop. And then I kept getting short in here, and I stopped out some on this move, and I got reshort right into this area. And then I got paid all the way to here, and then covered right on T1. I did it live, just telling people I'm getting out more here. And that trade paid for the losers because my stops on these losers was very tight. My profit taker was quite a bit bigger, like 2R profit taker. So when it came up here into this area, when I stopped out a little bit from my bad entry here, I went bigger on size here, and stop was in here. So it's either going to work or it doesn't. So it's 1, 2, 3R on the ones that I got out here. But most of them were around 2.3 Rs is where I got out the majority of these. So that's the setup. It's just another BBWC in a essentially choppy day. E-mini you can see is what was support is turning resistance quite clearly. This market will probably come up and test this area right here. It's how it's been moving. But short term resistance here. So it's broken down. So okay, here we go. Choppy. So kind of interesting. Low volume chop zone going sideways. So if you get some tight structures today, right, like that, can you play it? You see the trend line, right? Goes to here, bounce. Just a lot of interesting structures to play against, right? Here. The downside, maybe a little bit here. If this market comes back up, maybe up here or something, right? Because, well, look at this move. This move was kind of vicious, right? You had sideways, false break, and then here. So if we came all the way back up into here, what do you think? Do you think you can probably get some to here with the stop up here? Maybe. It's possible. Anyway, we're getting that little bounce, stopping everybody out back to OVWAP. It's not a precise level anymore, right? We're just rotating around the open, which is here. That's all that's happening. This is kind of in real time, right? This is like a 50 rule kind of thing. If you got long into from the shorts trapped here, you could see that shorts lost the battle here, right? Straight up. So if you got long into this area, you'd be wanting to get out of your long halfway up. And about, if you put your stop under the low, you're at 1R here. So you see that? The distance up here to here, better than 1R. So you're going to see longs probably take profit. Maybe it rolls over. Anyway, little predictive stuff here, but we'll see. Anyway, I'm going to go look at the comments here. It's on the other screen. On the ES, I noticed you switched between 1500 and 1000 volume, and the NQ between 600 and 400 volume. Do you have a preference or switch based on the time of day or based on the type of trading day? It just has to do like with if I'm looking at the market and the 1500 volume is just not like the market's really volatile and it's making moves based on lower volume, then I'll switch to that. Because I want to turn over my edge as fast as I can. So if we're consolidating and then we're moving out of ranges, and before we move out of range, we build a lot of volume, but not a lot of movement, then maybe I will increase the volume. a little bit. So it just depends on what is showing me nice movement. 1500 is a sweet spot. You could do 1000. Part of it, curing or Sergio, whatever you prefer, probably Sergio, but part of it is that, so I'm going to turn off, hold on, Discord. Just turn it off. It's distracting. So part of it is that if I change this to 1000 volume, I'm going to lose visibility from all this over here. So it's just practical too, right? So if I change it to 1000 V, so I clicked on this chart, Sergio, and I just typed 1000 V. You can see at the top right here, it'll change. So this is now 1000 volume, right? So like I'm going to go back to, let's say 1200. 1200. You see that get added up here? And then I add the V for volume, and then it changes the chart. So you see that? Anyway, 1000 volume's cool for scalping. All right, we're going to see more movement. See that? Can you see this up and down here where the shorts lost the battle and then whoosh, straight up? See that? Right there. But on a 1500, it looks different, doesn't it? A little bit. A little bit different. Anyway, rejected at this 50 line, so now here's the longest taking profit. Who knows what it's going to do? I mean, this market's trend down short term. It's lower highs and lower lows. So it's trend down right now. So we might make lower lows. We'll see. Pretty choppy market. But yeah, I mean, part of it is just out of practicality. You know, if you want to see more, you're going to have to change this. So if I wanted to see all of this on the chart, well, then I probably have to go to like 2500 volume. So see how it shows up here as I type 2500 V. Or when you move to Sierra chart. So Super Wallen says, any thoughts on the last few footprint candles having incomplete auctions? Yeah, we're in a choppy market that's sideways in garbage time, low volume. So, you know, both sides are nervous. So what he's talking about is this, right? This auction where you have a 45 lot imbalance without anything hitting below. I think it's 49 lot or greater. So in other words, the bid went to right here. Let's turn the bid on. Hold on. Trade. What is it? Show market data columns. So in other words, down here, the bid, which is right here, buy. The bid went to here, right underneath it. And everybody immediately bought the ask, essentially on this side right here. Let's make sure that this is right. So the ask could have been here, and the bid was right here. So it shows a nervousness, short term, for shorts to just cover. So that's what we're getting. We're getting a very two-way market. So how can you use that in your trading? Scalp the range. Scalp the range. So that's what this is here. So it's essentially, you're like, oh well, let's see if some of you guys who are newer, you may not have seen these settings before. Number bars right here. So numbers, bars, settings, and boy, it's been a while since I've been in these settings, guys. Haven't messed with this for quite a while. Right down here, highlight non-zero bid ask at high-low threshold 49. Okay, so if you go in and you see right here, and you go to Description, number buyers, highlight. It's okay. I'll include it here. Bookmark manager. We will not show that. We'll pull this screen off. We'll pull it up here. All right, highlight. What is it called? Highlight. F. Highlight. Non-zero. Bid ask. All right, let's see if I dox myself here on my account number. Might happen. All right, highlight non-zero bid. Now we're going to be fine, I think. Let's see. Let's be careful. So highlight non-zero bid and ask volume at high-low. This input controls what the numbers bar column among the three available columns that a non-zero bid volume and ask volume at the higher or lower the number of bars will be highlighted. No columns means the highlighting is not performed. Okay. Oh, it doesn't even really define it that well. But essentially what it does is if there's an imbalance of 49 or greater, as far as a difference between, so in other words, if the bottom of the candle doesn't end with 100% delta, but the difference between ask volume and bid volume is 49 or greater, the difference between, then it prints that. So in other words, there was still a whole lot of two-way transactions occurring right there, but they couldn't sell any lower than that candle. So it just suggests that there's unfinished business. Anyway. And we just broke it. There you go. I'm going to turn all this off. Why? Because I hardly have any screen room left here. Unless you guys want it on. I don't know. Hardly any screen room. So let's see if we get a little more two-way action here. Right? Volume building down here. All right, let me go turn it off real quick. Trade. Show market data columns. There you go. All right. Volume building down here. So we have this old node down here. Look at me turning into real-time analysis mode here. We should review some of the trades that have been made that have been good. All right, so that was a good trade for resistance. NASDAQ, we reviewed that one. What else? What else is good? Trying to do more of the real-time stuff in L3, guys. That's why I'm trying to just look back at the past and share what trades at least some of us have already taken. I believe a trader here took in the L3. He took on the E-mini, a short from here. All right, so we had this consolidation, pullback, big bearish candle here. Clear that. And you see how there's, well, let's see if I can switch this real quick. Kind of drag it so that we can see it a little better. So what he did, it was a nice trade, really nice trade, is this little consolidative region here. He took the short right here. No, that was the wrong one. Clear it. He took the short. It's just an interesting trade. He took the short into 51.50 or 41.50 is where he shorted right here. So just a move to get all the stops. And I believe he covered out here into T+1. He took the win. into the lows right here. That was a nice trade. Didn't really fit the BBWC, but it's an ante of sorts where you have um, price move back through like this, and then traps longs. And so he took it basically, you know, from my perspective, it's interesting because I see it as like halfway of this. So I have my own rules, right? I see it as halfway into this move. And so I see it as if you're long, you take profit here. He took the short for profits here. So yeah, sweet trade. I think it was Brucephus took that one. Live on the mic. But yeah, so to each their own. It was a great trade. Let's see, what else do we have? Starting to break down below these lows here. I mean, looking more head and shoulder-ish, isn't it? Right? Yeah, that's something that's good to talk about. So, we got this, and now we have this here. That's a head. This is the left shoulder. And we're just still trend down, right? So, we have some sort of neckline like this. Price might just move down here. But it's, look, we don't know that it's going to break here. I mean, I think a lot of people are starting to see that we're trend down now on this day. So, maybe we get a bounce like that. Then we go. I don't know. Markets, this is a two-way market, right? We have at the lows, we got a little bit of volume here. All right, 166 contracts, taper at the lows. We've got this volume here. Short's been wrong all up and through here. They're in profit now. So maybe we bounce like that. And that corresponds to this. But anyway, look, I've been talking about head and shoulders in the L3. And the idea of head and shoulders is that, or inverted head and shoulders, is that you want to be thinking, oh, we'll go to here. All right. If the market's going like this, it's going down. Right? And then it goes down. And then right at this, we'll call yellow neutral. The market's still neutral. But it's starting to have a change of manner, right? And you should be noticing it. Let me see if I can undo this. You should be noticing that change. Okay, I can't. Right here, before all this red happens. You should be going, change of behavior in the market. Potential for a right shoulder. So that's useful, right? Because you already see that we have a neutral high, and maybe it even goes higher, right, to here. And then it starts to turn back. So you should be thinking, all right, we had this downtrend, and then we had this big move, the head, and his left shoulder. And now the market might potentially start to, we're going to put a blue line. It's still, well, we'll do yellow until it actually changes trend. Yellow. Blue line, right? Against this neckline, you're now making higher highs. So now you're in a trend, right? So let's change it to the neutral part. Again, neutral, neutral, bearish. See? The trend's changing, right? You see that? So head and shoulders are just telling you something about the trend of the market short term. So when we say head and shoulders, forget the meme. Think about the trend, right? Think about the trend going from this to this to this to this, breaking neckline, and now trend up. So it's a understand what the head and shoulders is suggesting, and start looking for the potential trend line uh, break, while everybody and their mother might be thinking, I want to take this play here for the long. Look, what's the risk? The risk is this. The reward in this scenario might be here. But what if you take a long here anticipating this is going to happen, and then you take 1R here? Well, so where's your stop here? Somewhere here in this area, because you don't want this weird sort of deformed looking head and shoulders, so you can take a stop above the lows, because you could argue, well, it's not a good formation. So if you take the long here and you're out 1R and you're out a little bit more than 1R up here, maybe you can leave some for up here, right into this area. Now you have much better risk reward. So and probably better probability of the trade succeeding. Unless you get, like me, stopped out in the morning chop and news. But yeah, I still ended up winning because I got back in here and took out into highs and then stopped out on the pullback. And now the market's, way down here. Anyway, let's see. Let me make sure that I'm catching the comments here. Curing PC says, in one of your videos, you mentioned you are a student of Al Brooks and like to use the 10 and 20 SMA. Is the crossover something you look for when deciding to look for other signs of confluence? No. So the way I use the 10 and 20 SMA curing is, let me switch. Great question. Let's switch to this 5-minute chart here. I'm going to drag it out because I've got these things equally these things equally spaced according to a grid pattern in Sierra chart, so I can easily revert this back. All right. Holy Toledo, look at this thing. All right. Look at the size of that chart. All right. Back. You guys all have this chart now, right? Yeah, you do. All right. So in days where the market trends, it typically will ride the 10 SMA tightly. So you see here, 10 SMA, 10 SMA, one more bounce at the 10 SMA, and then the market went sideways on a higher time frame support zone, right? And then again, 10 SMA, boom, hit it, down. So I use the 10 SMA for strong trends, the 20 SMA for pullbacks in trend. And when these things start to cross or anything, I don't get out on crosses or anything like that. That's too simple. I like to get out on my higher time frame supports, which you guys don't see, right? You're not going to see all my weekend homework. I've pulled all those levels off the charts because those are things that I give to the L3 guys. So these are higher time frame supports, essentially. That's where I like to exit. I don't wait around. When the 10 SMA starts to break and cross the 20 over here. I don't get out here on this cross. Right? If I see, oh, higher time frame support, I'll look to take profit into it. Because look, by the time you're getting your cross, it's way up here. Right? And if you're short, look, if you're a trend trader, I get it. You want to hold for the whole day? You have to have some sort of signal. But for me, I look for my high time frame support and I just take profits into it. Because it's typically giving me more than 2 or 3 Rs if I'm with trend. So I'm good. I just take it. and I reduce position and I look for the market to hold some sort of pullback level, right? And then maybe we stay short a smaller size and leave runners, and that's about it. But no, I don't use the crosses in that simple a way. I use the 10 and 20 5-minute bar SMAs simply for alerting to me um, on whether the market's in a strong trend or not. So Jan asks, how do you work that? How do you work with that AVWAP standard deviation levels on 30-minute charts? And how do you typically anchor them? So I typically anchor them from swing lows or highs, or high volume prints, or important data prints. Brian Shannon, he has a whole article on anchored VWAP. He's kind of the godfather of a lot of that, I think. And maybe somebody would argue with me that somebody else was doing anchored VWAP for him, but I don't know. Um, and essentially, when here, let me expand that screen. So give me a sec here. Window. Tile as grid horizontally. All right, there we go. We're good. All right, so what Jan is talking about is this chart here. We will move it around a little bit. I think we got it. Yep. All right. So here's what Jan is talking about on this chart. So as you can see, when we pulled back off this, it's not the exact low, but when we pull back in this area, a little balance, and then we ripped up with all these gaps, these yellow are gaps. It's a great question, Jan. I'm anchoring VWAP off of this close down here on this big bar. And you can see that we, on this anchored VWAP, we've held it here, we held it here, and then the market got a little parabolic and went into 2 standard deviations. And up here, a little messy, right? Pulled out, pulled back in, kept riding it. It's been riding 2 standard. So if you tried to short here, you got wrecked a little bit. Then we went sideways, consolidated. Now we're getting a little long in the tooth here. 2 standard deviation, pullback. Finally touch it up here and pull back. Now, you guys in L3 know that I shorted 43.25. You guys all know what I said. I said it's probably the whole high of the move. But what did I do? I took an intraday trade for 5 points. Hindsight is a bitch, right? So, whatever. And that was my high time frame resistance for, you guys can go read about it in L3, okay? I put all the reasoning in the charts and in my write-ups. So, my high time frame stuff works. It works because I've been doing this a while and it works. It just, you can go see the reasoning in the L3. So I'm not going to get into all of that here because I've already done all the write-ups for the L3 guys. But I'm anchoring VWAP from the highs here at the highest, one of the higher volume candles here. Not this green one, the next one that's a little bit higher volume. But it's essentially the pivot high. Now, if VWAP breaks down here, notice it'll break support. And then the longs from down here will likely give up. We also have LVN. So look, Jan, there's a little more to it than just putting anchored VWAP on a chart and just saying if it breaks this, then that. All right, you got to use the context of the market. Jan, mine resets values as well. If you figure it out, you figure it out, let me know. Unfortunately, I got to go in every few days and move the anchors back to where I want them. It's a real pain in the ass. I haven't figured it out. I have not figured it out. Here's how I have mine set right now, and then I'll get to Phil's question, or he had a comment or a question. Let's see. It is a bullish AVWAP we'll look at. It's this is what it is. You can take a screenshot or something. I've been so look. It's one of those things that they don't have documentation on because it's a user contributed custom study, right? And so I have changed this a few times. Which was this let's see, these things. I've changed these. Was it this one? No. What was it? Which one did I change? Golly. Based on input only. Yes. I changed this to no, and it still did the moving thing on me. And after that, I thought, well, look, this is just your start type. It's for manual mouse anchoring. The end type is for continuous, right? Just to continue printing, to not use dates, right? So I don't see anything here that should suggest that the start point should be moving, right? So I gave up. I didn't want to spend any more time. I just resigned myself to the fact that every few days I have to move them. And then I thought to myself, well, if I have to move them every few days, at least it's forcing me to reevaluate, right? So, it is what it is for me. So if you never get this new project done, don't worry about it. I've already accepted it. Okay. All right. So let me look at Phil's question. For those trend days, is probably referring to the 10 and 20 SMA, would you enter only on the 10 SMA, or do you look for other confluence before you enter? I would be looking for entering on the 10 SMA, either on low volume pullbacks or high volume that suggest that shorts have been trapped there. So not just the 10 SMA, but certainly because I watch it every single day and I'm familiar. Like you could do the 21 EMA, right? Or the 13 EMA. That for you might be like, that's what I'm used to. Use that. The key is watch it every day and know relative to whatever moving average you decide, if the market bounces on bullish days relative to that moving average that you don't change every day, you should keep it the same. It's a baseline. So relative to where the market moves on your moving average, whatever you decide, if it's an EMA or a 10 SMA or a 20, again, I use 10 because I'm comfortable with it. So if you want to speak my language every day, which wouldn't be a bad thing, then I'd put the 10 and 20 on. But look, there's traders that use the 13 and the 21 and they swear by it for trend days. Great for them. We disconnect because I don't keep it on my charts. I'm like, okay, I trust you. Yeah, I could see its trend up. Because I watch the 10 SMA every single day and the 20 SMA every single day, I always talk back to that person. Oh, well, yeah, we're above the 10 SMA all day. And they're like, I don't use that. I don't know how that reacts, right? So we don't speak each other's language so much. We can both see the market's trending up, but how strongly relative to what you watch every single day is the question, right? It's not rocket science. Choose something, keep it on your chart. The 10 SMA just is reactive on trend days for me. So, that's a general point. I don't necessarily even put stops underneath it. I put stops a lot of times underneath the structure. Where did I stop out? I stopped out. This will be useful. Stopped out on this pullback. So I took profit into this area like crazy off this position, and I stopped out at 48.50. Now, did it happen to be below the 10 SMA when it happened? Yeah. So it just looked like I was putting a stop below the 10 SMA, but I wasn't. I was putting a stop below what was then what was then just a big volume node like that. That's all. Something like this. So my stop was in here. So I was thinking that this essentially was the volume node that caused it. I was thinking if we push below here, then this market's not as bullish as I think it is. And so I should be wrong on my trade at essentially, here's 48.50 here. So I was using this. So I'm thinking like all this positive delta, all these aggressive buyers, you would think they'd want to buy, right? Here. And then the market would turn up. It happened that there was volume that built above it, right? And it looked good for me for a little bit on the trade. But this thing eventually went up and down, then took out my stop. And then it bounced like crazy. And I thought, oh, that sucks. I was the low almost of the move down here at 48.50. But I didn't cry over it all morning. I just said, okay, well, let's look for the next trade. So yeah, there's no guarantee of a perfect trade, guys. You just, sometimes you put a stop where you think, according to your thesis, the market should demonstrate some strength, and you're wrong. And you stop out, and the market still goes and rips, I don't know, 10 points in the other direction. You have a short opportunity for 30 points in hindsight. Who knows? But anyway, hopefully that's kind of clear. May be useful. Let's see. All right. Oh, mother bleeper. Got to do that all again. Thank you so very much. Sorry about that. Okay. We're going to find this again. Okay. Thank you, Jan. Thank you, Phil. Oh, boy. All right. All right. So what I was talking about, I'm going to try to repeat myself here. Sorry about that. Was in the morning when we ripped up here, I took all kinds of profit here. And then I left a small position. And it I put my stop underneath this volume node here. And in the morning, the volume node looked kind of like this. Right? And it was because of this. Because of this big orange volume node in the footprint. Orange because Andre likes orange and I switched it for him. Andre's the man. Okay, so I put my stop here at 48.50 here. And it just happened to line up with the 10 SMA. Right? And so I think people maybe thought, oh, he's putting his stop underneath the 10 SMA. Because in real time, right, this market came down, built a volume node, and I thought my trade was good. And then it meandered here, and it, whoop, took out my stop. I said, oh. And then the next candle went a little lower, and then it ripped. All the way up here, and I said, oh, probably the low. That sucks. Live on the mic, lamenting my exit. But I was just looking for the next trade. I did short up here. I shorted this whole area and took a sweet, sweet win. Back down, right? So, in my mind, the non-hold here, said longs weren't as strong as people thought. Because in a strong, strong market, this node here should rip up. And it didn't, right? So anyway, what I was talking about earlier was the fact that I didn't cry over spilled milk when I stopped out below this node at 48.50. I just started looking for the next trade, right? But no, do I put a stop under the 10 SMA? No. Typically, I'm trying to put a stop under structure. I better be on the right screen. Yeah, I put a stop under structure, um, and that's how I do it, right? If it aligns with the 10 SMA and it's a super strong trend day already, and it's held the 10 SMA, then yeah, maybe I do put my stop way down here because I think it's, if I get long above the 10 SMA, maybe my stop's here on the 20. And then I'm considering other things, right? Like Elliott wave and stuff like that. That's the next video before the end of the month. By the way, next video, Elliott wave, BBWC is going to be up to level 3. So you're not going to be able to watch that video. The next video will be BBWC variance after Elliott wave. I hate that order. Well, it's just how I'm going to do it. So anyway, watch the BBWC. And anybody coming in after that is going to have to buy level 3 just for the videos. And then when we get to 9 videos, you want to watch the beginning videos? Then they're going to have to buy level 4. All right, it's going to get more expensive. So they can buy it and then roll it, the membership down to 3 or 2 the next month, whatever. But all right, so for you guys that have been here from day 1, take good notes on the videos you've watched because they aren't just going to be available forever. It's the fair way to do it. So anyway, I think I've addressed that. Let's see. All right, Super Walnuts says, on the '07 footprint candle, would you use the negative delta below the candle's POC? So '07, so this guy here is, let's see. '0740 here. In hindsight, it looks nice. So this 7. So the way I use rotations, Bob, is or Super Walnut. Let's see. 43. So here, right? Just want to make sure I'm understanding. Yeah, I mean, I did get long here, Bob. Right here. That's exactly what on the first touch. You guys remember that I bought right here, right into 46.5, and then I said I bought all lower. I was doing the second time T plus. That was a trade I didn't talk about. Yeah, so this is what Bob's talking about. I started buying at 46.50 here. And when it came down further, I bought more with my stop here. Because the idea is T1 is going to hold. And it's only, so here we went above. And then we came back and held T1. And then we ripped up, right? Now we're coming back for, so this is number 1 test. This is number 2. It's not number 3. So I like to take it. Now I like to take it above because this already held here. T1 is yesterday's settlement. And so I got off into this trade up here at 49s, right here. And I believe this is where Brucephus shorted for that anti-move that we talked about earlier. Yep, that's that anti-move that we were talking about. So anyway, I didn't short, but I took a long, essentially, with an entry about here. And then I started taking my 1 hour profits. You guys even heard it. Into here. And then I was out into the last ones into here. So it's like entry, exit, exits. So the exits were from here to here. And my stop was here. See, it's above 1R. It was a good trade. I got my mojo back in this area. Was happy. Well, actually, I got my mojo back here. Started feeling better about myself. I don't like having a bunch of losers in a row, even if I swing trade the morning, which I typically do. Um, I've talked about this for a while. My psychology as a trader is I like the high win rate stuff. I mean, you're like, everybody does, but no, it's what I gear my trading towards. Around 1R trading and high win rate. It makes me happiest. I'm in the Zen state when I'm doing that. Yeah, great question, Super Walnuts. I started to feel like I was gonna miss the point a little bit. Make sure, but yeah, you're right. That big negative delta there. I actually didn't play there because of the negative deltas, Bob. I played because of the T1 holding, but I guess that in hindsight, this was the entry, wasn't it? I wish I could have seen more at the time, but it's a little hard for me to talk on mic a lot of times and catch everything. It's one of those things where the more you're doing, the less you're gonna see. So I definitely did not see that big delta there. So I appreciate you pointing it out because you know maybe next time when I'm talking to the group in L3, I'll uh, I'll just take a quick glance because one of you guys now have pointed it out. So I appreciate it very much. Excuse me. Water here. You guys don't want to hear the slurping, so I'm probably quiet. I need to adjust all these screens again before I forget. Hmm. On or off. Windows. Tile as grid horizontally. There you go. Beautiful. I do like this setup with 5 screens on top because I'm tracking other markets now on the lower 49, and I've linked my quote board because there's other markets I probably should be looking at movement, like oil right now, ripping to the upside off of this bull flag. You're trading oil right now into resistance. Oh, I want to short it. Keep my fingers off. Okay, stop for the scalp. I think it's perfect scalp zone. 93.85 oil right now. Oil, right? Oh, I want it so bad. Oh, 93.85. We're pulling back 4 cents. 5 cents. Here come the longs from the top. We'll see. I don't know. OPEC released some nice news earlier, so this is definitely, if you're going to scalp short oil, tight stop. Tight stop. Maybe 94 stop. And you're maybe looking for 30 cents of downside here to like 93.52. Signaling. I know. I know. I know. Marco, it's the L3. I can't help myself. All I want to do is start clicking buttons and trading. Ay, caramba, I see stuff everywhere all the time. All I want to do is trade. Trade, trade, trade. I love trading. I love markets. You don't even know. I want to trade everything all the time. Ignore everybody. Just start trading and then not even worrying about what I sound like. Just start clicking everything. Get into multiple positions. Expand my trade positions window in Sierra chart. I got 12 positions open. Yes. Manage them. I love it. I just love it. Um, if I had a superpower, I'd want to be an algo. Anyway, I think we've kind of covered enough here, right? I think this is a good live stream. It's over an hour. I'm probably a little tired. I'm gonna head back to Discord and just talk with you guys in L2. We'll just talk, all chat about markets if you guys want. Um, I'm a little trade your algo. I like it. TYA baby. I'm gonna just talk with you guys and let's just chat about markets, right? You guys want to chat? I'll just Mike, you're my spirit animal, bro. I swear. Right? Look, how many of us traders? We love trading. Come on. All right, thanks, guys. Yeah, let's head over before this devolves into jokes for all those people. Sorry, Arnie, you come back from vacation and you get this dude who's talking about markets and doesn't even have the right screen up. I hope you had a great vacation, Arnie. You're probably sharper than all of us for hanging out in the markets. Namaste, my friend. All right, take care. I'll see you guys in Discord.